Today we're going to be talking about the top stocks you should be buying in 2022. Starting off with the first one, which is BlackRock. Now BlackRock is actually one of the biggest money manager in the world. When we look at the stock, it currently sits at almost $900. Back in 99 it was around $15 and today it is at $900. So a huge growth, and the good thing is been successfully growing year over year. When you look at the key data, it currently sits around 136 billion, which when you think about where they're all invested and being one of the biggest money managers, actually makes it quite small in comparison to companies like Apple or Microsoft at almost $2.5 trillion. So still only a fraction of it. So I really think that they're gonna have a long way to grow going forward. Moreover, being one of the most popular issuers of ETFs in the world, the famous iShares, BlackRock has a huge upside potential going forward, and that reflects in the numbers. Their 5-year beta score is at 1.2, which is very good. That basically means they're slightly more volatile than the rest of the market, which is at 1.0. That's kind of the market index of the S&P 500. So if you're over 1, that means you're slightly more volatile. That can be up and down volatile, obviously. And if you're under 1, that means you're less volatile than other stocks in the S&P 500. Their price to earnings ratio is quite healthy at 23, and their earnings per share is at 37. So that's actually really good. They're a very profitable company. And what I really like about, in addition to the upside potential and the price appreciation, they're also paying a very healthy dividend of 1.8%, which is amazing. They've always beaten the estimations, which is great because if you do this successfully, people really gain trust in your company and understand that you know what you do and therefore place a higher price in the future on you. And then we come to the recommendations, and that's usually a summary of all the analysts, what they're saying. And as you can see, it's leaning towards very strong buy at 1.8, which is very good. They're currently sitting at $900. The lowest estimations go to around $800. But on the upside, it goes all the way over $1,000. So I think obviously there's not going to be a huge price swing like we have with some high growth tech stocks. But overall, when you see in the past, plus the dividends they're paying and look into the future, I think BlackRock is definitely a stock to watch and a stock to own in your portfolio in 2022. And I always like to go on to holders so you can see who are the biggest holders of that stock. And it kind of breaks it down, as you can see. Insiders, it's only 1%, but a majority of it are held by institutions, which is a good sign because those institutions, they wouldn't risk their money if they wouldn't see the long-term upside potential of the stock. Here you can see the top institution who are actually holding it. So even BlackRock is holding their own stock, obviously, but then Vanguard, which is one of the second biggest money managers in the world, holding 8% of the company, which is great. And one last thing I like to look at when you go into statistics, I always like to look at the short percentage. So that's basically how many percent of the available shares are being shorted, meaning that people bet against the stock going up. So basically they bet on the stock going down. So that's a good percentage indication to see how many people are bearish on the stock. And if there's a big percentage, that means a lot of people have concerns or bet against the company, and they can use all kinds of different techniques to bring the price down. But when we look at BlackRock in this example, it's around 1%, which is really small, and that gives me confidence that people really not betting against the company, otherwise it would be higher, but basically believing in the long-term profitability and the long-term growth and appreciation and price of the stock. Moving to the second stock, and that is Twitter. Now Twitter is quite interesting. They're never really taking off like the other social media companies such as Facebook or Meta, what it's called today, or Snap or even Pinterest. And most recently Twitter had a change in their leadership. The founder and CEO Jack Dorsey has recently resigned, and that actually led to a big drop in stock price. A lot of people panicked about it, but I actually think it's a good thing because the company will reposition itself and they may actually focus on the potential that Twitter has, because personally for me Twitter is an amazing tool and the resource platform that I use, but I think it hasn't really been utilized yet and brought to the masses, and they haven't found a way to really monetize it. And that's why investors are a bit hesitant to invest into the stock because they don't know how they're going to produce the revenues and profits in the future. So I do think by having a new leadership and a new CEO who is from within the team, they will work on that and really make sure they find a way to monetize. They recently introduced Spaces, which is kind of like a clubhouse on Twitter. So they're really looking to diversify and find new ways to capture new people coming into the platform. So when we look at the stock itself, it currently sits at $42. But scarily enough, we're basically back to 2013 when it all started, where it was around the same price range. So you can see they kind of dropped and went up and dropped and went up. Quite volatile stock actually. So I do believe they didn't really have their breakout point yet. And that's why I'm quite bullish that long term going forward, there is a huge upside because as you can see, they haven't really found their way yet they have hundreds of millions of users. So I think it's just a matter of fine tuning and being able to monetize their business model. Because when we look at the market cap, it only sits at 33 billion, which is actually not that much when we look at other big companies in the S&P 500. Their beta is at 0.67, meaning it's slightly less volatile than other stocks in the S&P 500. The earnings per share is currently negative, even though they had a few quarters of positive earnings. When we look at the whole year together, they're still at a loss. And that's again why investors are a bit afraid to really invest into the stock. With regards to analyst recommendations, you can see they're sitting at 2.7. So between a buy and a hold, the price target's currently sitting at $42. On the low end side, it can go to $33, but on the high end side, it can go all the way to $86. So it can almost double in the next year. Holders, again, majority of them are institutions. And of those, banks like Morgan Stanley, Vanguard, and again BlackRock. So once again, some of the biggest money managers in the world believing in a stock, and why shouldn't you? Now, once again, let's hop over to the short seller statistics, and here you can see it's actually almost 3%, and that's a bit higher than some other stocks. Still not reason to worry, but it shows you that more people are betting against Twitter. For me personally, 3% is still not so bad, and that's why I'm still bullish on Twitter. All right, next up, we have Starbucks. Now, who doesn't like a good cup of coffee? With all the difficulties and lockdowns going on in the world for the last few months, Starbucks, like so many other restaurants and hotels, had a difficult times because people actually couldn't go to the stores. But now as the world slowly starts opening up again, they're gonna be really benefiting from this. And Starbucks is no longer only about coffee. They're really expanding into food, groceries, and retail. So they're actually so much more than just coffee, and that's great. And they're not stopping to grow. They're really going to expand and grow going forward. So the stock currently sits around $111, but when you look at when it all started back in 92, I mean, the growth has been phenomenal. It's been less than $1 when it was listed, and to grow all the way to $111, I mean, what a growth. And you can see it's been really year after year after year growing, and that really gives me confidence that the stock will continue to do so. Currently, it has a market cap of 130 billion. So when I compare this, for example, to Coca-Cola, which sits around 230 billion at the moment, there's still a huge upside for them to grow and catch Coca-Cola. And personally, I think they're probably going to be more valuable in the long term. The beta, once again, is below zero, and that makes it less volatile, which is of course natural and you would expect from a coffee company. Very good earnings per share of 3.5 and a healthy PE ratio of 31. And one more thing I love about Starbucks, they're paying actually a dividend of 1.76%. That means every quarter I'm getting a dividend payment from them, which is great. So whenever I go to a Starbucks, I actually feel like a shareholder and actually paying for my coffee with a dividend, which is amazing and makes me even more invested into the stock. The last few quarters, they've also beaten all expectations, and analyst recommendations currently sits at 2.2 between a buy and a hold. And when we look at the price targets, again, currently from 111 on the low end side, it can go all the way down to 96, but on the high end side, it can go all the way to 148, which is almost a 50% growth from where it is today in the next year. So very promising indeed. With regards to holders, once again, majority of them are institutional holders and the usual suspects of Vanguard, BlackRock, etc. So again, those ones are the biggest ETFs in the world. So that's when you buy an ETF, they usually invest into those because they're part of the S&P 500. With regards to short shares, actually there isn't really much, 1.15, which is healthy, and there's no reason for people to bet against Starbucks unless some big trendy tea company bets against it. Otherwise, you know that Starbucks is only gonna go one way, and that's up. Next up, we have Coinbase. Now, Coinbase is one of the biggest crypto exchanges in the world. They were actually the first major crypto exchange to be listed on the NASDAQ because that boosted their image and given more safety and security for users when they invested through Coinbase. When they started IPOing, they actually started slightly higher at $322 and then went through difficult times, and now recently came back to $265. Now the great thing about Coinbase is for investors who are hesitant of buying their own cryptocurrency and holding their keys and being responsible for them, you can have exposure to cryptocurrency by buying their stocks and holding them as shares rather than buying your own cryptos, because Coinbase naturally is very much correlated to the price of cryptocurrency. So if the price of cryptos goes up, naturally the price of Coinbase goes up because their earnings and their income goes up. On the flip side, if the cryptocurrency market drops, so does the price of Coinbase. So you can have exposure to the crypto market by owning it, and that can be quite good for a lot of people who are hesitant of having their own cryptocurrency. So currently they have a market cap of 69 billion, which is only half of Starbucks. So once again, if they become the #1 crypto exchange in the world and crypto continues to grow in the future, that's surely going to go up massively in the future. And as you can see, the PE ratio is quite low compared to others. The EPS ratio is quite high at 13 because they are very profitable. So when we look at price recommendations, it currently sits at 2.1, which is pretty much a buy, but very interesting, the price targets are really going only very low on the 265, so that means we kind of bottomed out already. But on the upside, you're reaching a target of almost $600. That's more than twice of the current price, and that's normal because people expect Bitcoin for more than double in the next year, so naturally Coinbase would be following suit as well. In terms of short percentages, only 2%, which honestly I was quite surprised because I would have expected more people to bet against Coinbase and cryptocurrency in general, but 2% shows that people really believe in the long-term growth potential of the stock. And lastly, we not have have a single stock, but actually a collection, which makes it an ETF, and that is the VOO, the Vanguard S&P 500. Or for people based in Europe who can't buy VOO, you have to buy the VUSA, VUSA, which basically is the same, but the European domiciled version of the VOO. Now, I love picking stocks, etc., but buying an ETF is a sure thing to grow your portfolio in the long term. And when you invest into the S&P 500, you're basically betting on the US economy. And if they would go down massively, I think the whole world has a problem. That's why I continue to invest every month into that. When we look at the price, it currently sits at $416. And when we look at the historic performance, it has been trending up very nicely. What I love about this ETF, it has a very low expense ratio of only 0.03%, which is next to nothing, and other ETFs are much more expensive, and that will impact your own yield. So always look at this number. So when we look at the performance year to date, it basically returned already 26%, which is outstanding and unheard of. Of course, it's a very special year. Historically, over the last 100 years, it returned anywhere from 7 to 9%, which is still very good and beats inflation. And you can see here all over the last few years performance, how it's been trending. Of course, in 2018, there was a slight drop in the overall market, but other than that, all the other years, it's been green and growing. And that's really good to put the majority of your money into a safer investment and really let it grow over time. In terms of holdings, what's a part of the ETF, you can see here the sectors they're investing in, which is really good. Of course, the biggest one is technology because it's weighted by market cap, and some of the biggest market caps in the S&P 500 are companies like Apple, Amazon, and Microsoft, and naturally that will lead to a higher weighting in that sector. So here are the top 10 biggest companies in the ETF, in the S&P 500. So by buying into this ETF, you would be naturally owning some of those companies as well. So these are my 5 stock recommendations for 2022. I think all of them are going to be doing very well in next year. Some of them are obviously more risky than others. And that's why I did throw in the ETF, because that kind of gives you that security, a safety net, where you're going to invest the majority of your money and the rest you can put into more volatile and high growth stocks. Next up, check out the video over here. I hope you found the video useful. If you did, give it a like, subscribe to the channel, and let me know in the comments which stocks you're going to buy in 2022. I thank you so much for watching. Stay blessed, stay awesome, and I'll see you in the next one. Take care. Ciao, ciao.